Today we're going to throw the Haven Lifeline out to Ramon. Say hi, Ramon.
Hey, Joe and OG. The last t-shirt I got from you guys is starting to become a little faded, so I figured I'd call in and see if I can score me another one. So here we go. I wanted to see if you guys can touch on infinity banking. Now, OG, we've been told you don't prep for the show, so I figured I'd give you a little backstory here. Apparently, this is just when an individual takes out a whole life policy and then takes loan against that policy in order to fund their lifestyle. Apparently, the big draw is that the money keeps working, even though by you taking a loan out, the money is still quote unquote working or invested, and therefore you maximize your gains. I'm not sure if there's more to the story than that, but I figured I'd see if you guys can kind of put your spin on it. Really looking forward to getting that sweet code in the mail for a new t-shirt. It's about time. Thanks, guys. See ya.
Hey, thanks, Ramon. And by the way, even though he does show up cold for the show, he is deep body of knowledge on how life insurance policies work. So infinite banking, nothing new to you and I, OG. What are your thoughts about infinite banking? And by the way, I love, Ramon, that you call up whenever it's time to upgrade the wardrobe, because a lot of sweet t-shirts out there. But another Haven Life Greatest Money Show Unearthed code coming your way for that great question.
Infinite banking. Infinite ways for other people to earn commission on you. Is that what that means? He left that part out. It's the infinite way for someone to rob you blind of your money in little increments.
Yeah, I don't think so. I don't think so.
Okay, cool.
I actually think infinite banking can work really well.
Yeah, no. Okay, so let's talk about it. Anytime that you use a tool that is not designed for its use, there's going to be some inefficiencies there. So you say like, oh, you can use your whole life policy so you can pay your electric bill. Okay, there's something that's not right about that statement. And if you just take it for what it's worth, which is to say, do I need to buy life insurance and dump a whole bunch of cash into it so that I can then take loans on my cash so that I can live my life? Like, you're just putting in lots of restrictions along the way. You see this also with like home equity lines of credit, right? I actually did. You and I talked about this, that I was like, I might do this just to see how screwed up it is.
I think this is great too. I think this is also great.
I couldn't figure out like how many. I have enough moving parts in my life. I didn't need to have like, and then I take a line of credit, but I got to call the bank, and then the mortgage is due, and I pay it all back, and then it's like, oh my God, just put it in my savings account, it'd be easier.
Yes.
So anytime. Philosophically, this is a great place to start, I think. Anytime that you're being pitched something that involves a tool that is not designed for that particular thing, you have to ask a lot more questions. Like, why in the heck do I need life insurance to like create a savings account? That doesn't make any sense to me. Oh no, but the savings account pays you back. Like, that's what my savings account does. I don't need to have a life insurance policy to do that. What's in it for you, insurance sales person who's trying to talk me into this? Oh, that's right, a commission. And again, not that commissions or insurance salespeople shouldn't get commissions. I think it's fine. Like, how you get paid is how you get paid, but you should need whole life insurance for the purposes that whole life insurance provide, which is life insurance for your lifetime and, a death benefit that you're going to have when you're 110 years old. Not because it can provide a withdrawal or tax-free withdrawal if you need to, put food on the table in 10 years from now. So,
Ramon, I'm going to be a little more positive about this. I think infinite banking, and without getting into all the strings that get pulled, or, different people call the mortgage thing that OG's talking about, mortgage shredding, mortgage acceleration. I think these plans both can work incredibly well. And when you do the math on how they work, you can't dispute the math. So if the person takes you through the math and shows you how it works, you can't dispute the math. That is not where I have a problem with it, OG, because I, like you, have a problem with it. I think it works great. The problem is both of these strategies work really well until they don't. And the one thing that makes both of these strategies run really, really well is free cash flow. because as long as you continually have the free cash flow to make the strategy work, it works great. But the second that your cash flow goes to hell in infinite banking, to your point, OG, the second your cash flow goes to hell, all of a sudden now you're paying more and more and more money for insurance. And as you know, that's going to multiply because the amount of outstanding coverage that the company is going to have to insure versus the amount that you are supposedly insuring, right? That number just keeps going up and up and up. So your costs go from almost nothing, if you're doing it right, to a monstrosity that is very, very difficult to get the wheels back on the bus. And mortgage shredding, if you run out of cash flow, now you've got a mortgage and a home equity loan instead of just the straightforward mortgage or straightforward home equity loan. You now have both. You now have more debt and 2 payments, and you now have this thing that because you don't have cash flow, now you're more likely to lose your house because you don't have cash flow than you did beforehand. But that doesn't mean they don't work. They work. They work just fine. The problem that I have with them is when they don't work, the downside is far, far greater than the downside is if you just do it the straightforward way. And that's not to dispute anything you said. I totally agree that somebody is telling you, hey, use life insurance as a savings account. You got to go, what?
Yeah, it's ugly. It's inefficient. I would argue that there's probably some BS math in there. But your point is probably the easiest one, which is all of it works until it stops working. And when it stops working in a hurry, and it gets ugly fast.
The downside is way worse. The downside's way worse.
Yeah. I mean, again, I would think about it from the concept of like, what are you trying to do? You know, like if you're using it for the line of credit, the home equity thing, I want to pay my house off faster, then pay your house off faster. Like you don't need to like go get another loan to pay your house. Like, but it'll save me 6 extra months of interest. Okay. Just go get a little side hustle and go pay that extra, don't go out to eat for 6 months and like save that. You know what I mean? Like figure out what it is you actually think that you're getting from it and see if there's another way to do that. You know what I mean? It's like, I was having this conversation with somebody the other day about a 0% balance transfer on a credit card, right? They're like, oh, I got this 0% offer. I got this credit card. I should do it. And I'm like, well, what's the fee? Oh, there's no fee. I'm like, there's a fee. There has to be a fee.
I always love that. There is no fee.
No, there's no. Yeah, there's fee. Well, it's 3%. Okay. All right. So it's a $10,000 balance. Right now you're paying 15% interest. It's a 0% deal. So you go 15 to 0 sounds like a really good deal. How long is the 0% good for? Oh, it's good until May. Okay. So now you got 5 months of 0%, which is better than paying 15% but you're paying 3 to get it. So that's $300. You would have paid $125 a month for the next 5 months worth of interest if you paid 0, right? So you've got $700 of interest going in. You're paying $300 to not have it, so now you're going, well, my benefit is $400. That's not 0, right? It's something. I agree with that completely, but there's a lot of stuff that goes on to save you $400. And my question would be, is there an easier way for you to just go make $400? Do you got some crap in the closet that you can throw on eBay and make $400? Probably, right? So, anyways, okay. Let me slide this soapbox off to the side. I'm gonna step down from it. Okay, good.
Yeah, thanks for the question, Ramon. And by the way, and I think there's nothing wrong, back to mortgage shredding, and I know that wasn't his question. I think there's nothing wrong with playing that arbitrage game between the way that the way a 30-year loan is calculated and the way that a home equity loan is calculated. One with straight interest and one with an amortization schedule, and reaping the reward of looking at the way the bank charges those two loans and switching from one to another. But to your point, it complicates the hell out of things. And to my point, you just got to have a lot of cash flow. Yeah. Got to have a lot of cash flow. Thanks for the question, Ramon. Guess what? We're going to send Ramon. We're not doing anything. Mom's friend Gertrude going to send a code to Ramon for being brave and asking another question. Going to help him upgrade his wardrobe, OG. StackingBenjamins.com anchor.fm/voicemail if you've got a question for OG and I.